if a currency reset is the fourth option, a lot of governments are probably going to choose that. And they're just going to give up their power to create currency out of thin air, as much as they hate doing that. And they're going to go back to something like maybe a gold standard. So, and of course, it'll be with gold at $10,000 or $15,000 an ounce, which completely upends the wealth distribution in society when that happens. But again, it'll be the people who trust the government and hold dollars or euros or pounds sterling who are hurt by that. And the stackers and the gold bugs and the already rich people who all own lots of gold and silver, there's going to be political unrest that goes with that, as all the people who got screwed over by their governments don't take it well and hit the streets. But it could be seen as the least bad option at some point in the coming decade.
The second bull phase of the 21st century began in 2019, and gold is currently in this phase, likely to remain within a strong bullish trend. According to Trading on a Contract for Difference, gold has increased $433.24, or 21%, since the beginning of 2024. Historically, gold reached an all-time high of $2,531.70 in August 2024. Former Wall Street financial analyst John Rubino is known for deep insights into economic trends. According to him, returning to the gold standard could push gold prices to $15,000 an ounce, dramatically shifting wealth. He believes traditional currency holders will suffer while predicting an inevitable monetary reset as central banks increasingly buy gold. Assuming that gold will play a role in the new BRICS currency, the probability is high that's yet another reason to invest in gold. The Midas Metal has made new record highs this year, and as of this writing, $3,000 is only about another 18% rally away. Having a major currency backed by gold increases the demand for gold. Unlike paper currency, governments can't just create more out of thin air. Based on current trends, Rubino also underscores the growing interest in Bitcoin. Even though it's not functioning like money, people are beginning to treat it as such. He suggests cryptos like Bitcoin or Ethereum could play a role in a future monetary reset, though the specifics remain uncertain. During the COVID-19 pandemic, not all investors turned to Bitcoin. Many followed traditional strategies and transitioned to gold. As a result, gold's price skyrocketed from just below $1,300 in early 2019 to nearly $2,100 in mid-2020. Concurrently, Rubino explains that a crisis will likely force governments to abandon the current monetary system. Facing choices like hyperinflation or deflation, he suggests many may opt for a currency reset, possibly returning to a gold standard. Now, we present the clips of John Rubino's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think we have to choose something else. We've got to go to another standard at some point. We'll have the Jim Rickards monetary reset that he talks about at some point. And the question is, what will it be? Like, central banks right now are aggressively buying gold, which implies two things. One is that they're sick of dollar hegemony. You know, the US uses the dollar as a weapon. We bully everybody in the world. So owning dollars as a reserve asset is kind of making a political statement. You're saying you're on the US/NATO side of the coming global conflict. And a lot of countries don't necessarily want to send that message. So they can replace their dollars in their reserve assets, foreign exchange reserves, with gold, which is a neutral asset. Gold, you know, by buying gold, you're not really taking sides. You're just buying this asset that has been a reserve asset for 3,000 years, and you're backing your currency with it. So that's one thing that's happening. At the same time, there's a lot of capital flowing into Bitcoin. And Bitcoin is starting to be used as money. I mean, I don't want to get ahead of that. It's not money yet, functionally, but people are starting to look at it that way and treat it that way. So it's possible that that cryptos play a role in the monetary reset. I have no idea what that role will be, but it could be that they're in the mix, you know, especially Bitcoin, maybe Ethereum, maybe a handful of other cryptos. We'll see. But that remains to be debated. And we have to have the crisis first, where it's conceivable for governments to give up on the current monetary system. And they're looking at it as maybe the best option out of 3 or 4 horrendous options, you know, because the other options are a Weimar style hyperinflation or a 1930 style deflationary crash, and the French Revolution, where the peasants got their pitchforks and they went to the castles and pulled the aristocrats out and beheaded them. You know, we're looking at least metaphorical scenarios like that. And if a currency reset is the fourth option, a lot of governments are probably going to choose that. And they're just going to give up their power to create currency out of thin air, as much as they hate doing that. And they're going to go back to something like maybe a gold standard. So, and of course, it'll be with gold at $10,000 or $15,000 an ounce, which completely upends the wealth distribution in society when that happens. But again, it'll be the people who trust the government and hold dollars or euros or pounds sterling who are hurt by that. And the stackers and the gold bugs and the already rich people who all own lots of gold and silver who are enriched further by that. So there's going to be political unrest that goes with that, as all the people who got screwed over by their governments don't take it well and hit the streets. But it could be seen as the least bad option at some point in the coming decade.
John Rubino says central banks buy gold but avoid mining stocks, signaling stronger support for the metal. He warns that rising resource nationalization, as seen in countries like Mexico and Chile, makes mining riskier. However, he believes higher gold prices will boost profits for major miners. The second quarter of 2024 was a watershed moment for many gold mining companies. Industry leaders such as Barrick Gold, Newmont Corporation, and Agnico Eagle Mines reported impressive financial results, with Agnico Eagle notably achieving record free cash flow. This surge in profitability wasn't isolated to a few top performers. Across the board, major gold producers demonstrated significant year-over-year improvements in their operating cash flows. Operating cash flow for major gold producers increased by an average of 65% year-over-year in the second quarter of 2024. With all factors in play, Rubino predicts a multi-stage growth process where large miners benefit first, followed by mid-tier and smaller exploration firms. He echoes Rick Rule, suggesting junior miners' stocks could double as they move from hated to not hated. Let's get back to the interview.
Central banks aggressively buying gold, but they're not buying gold miners. So there's a lot more wind at the back of the metal than the miners. Normally, when gold goes up, the gold miners go up even more. And two things are happening that are causing that right now. Well, the first thing you mentioned. The second is that mining is a really hard business all of a sudden. It used to be that if you had a gold mine in Chile or Mexico or even Canada, you were pretty well guaranteed that the government was going to leave you alone to do your thing. But that's not the case necessarily anymore. A lot of countries are they're nationalizing their resources. Who was it? Mexico that just nationalized their lithium resources? Maybe. And Chile is thinking about doing the same thing. Mexico is now talking about nationalizing their silver mines. So all of a sudden, miners do not look nearly as the big solid miners don't look risk-free anymore, put it that way. Oh, and then Cobre Panama, there was one of the world's biggest copper mines was just closed down by the Panamanian government. So all of that stuff's happening, and it's making the miners look a little bit less of a sure thing than they used to. Now, having said all that, gold at $2,500 US an ounce covers over a lot of those problems, right? Because if you're Agnico Eagle or Newmont, and you're producing the same amount of gold this year as last year, well, you're going to get 16% or so more dollars for each ounce of gold that you're selling. And if you're well run, which those guys are mostly well run, that increase in revenue goes straight down to earnings and cash flow, and it makes your numbers look a lot better. And in the second quarter, the big gold miners generally reported pretty good numbers, in part because the price of what they're selling went way up. So let central banks keep buying gold and keep pushing the price of gold up, or at least supporting it. And that translate into higher earnings for the miners. Then people are going to start buying those stocks regardless. I mean, they already kind of are. The big solid mining stocks are up reasonably. And that momentum will increase if people start thinking, okay, $2,500 an ounce for gold is real. It's going to be there for the next 2 or 3 years. Now I can do my spreadsheet and see what that means for Agnico's cash flow. And I'm going to get a really nice number. And so I'll buy the stock. So that kind of thing will happen. And then it filters down to the smaller players in the space, because if the big guys have excess cash flow, they're eventually going to start using it to buy the little guys. And that will light a fire under the junior miners and under some of the explorers that have really, really good looking deposits that they're proving out and everything. So you'll see that money filter down, and you'll see the little volatile stocks in this space go up more in percentage terms than the big guys. But it works in stages. First the generalist money flows into Agnico Eagle and Newmont and Barrick. Then it flows into the mid-range guys, and then it flows into the explorers. So we have a 2 or 3 year process here with the central banks leading the way. Central banks are buying gold, and that flows into the miners in stages. And I think there's a reasonable chance that we see it play out that way again, as long as geopolitics doesn't turn completely crazy, where a couple of countries just nationalize all their natural resources and just kick the miners out of the country. If we have that, then that's tricky. But if we don't have that, then I think miners are very attractive at this point. The big guys are fairly valued, but could still go up from here. And the little guys are hated. So when they're hated, that means, as Rick Rule likes to say, just going from hated to not hated is usually a doubling or something like that. So that's the first easy money in the junior space in mining. And I think we're, knock on wood, we're in the run up to something like that, where the explorers go from hated to not hated and make some nice runs in the process.
The ongoing evolution in the gold market and geopolitical and economic uncertainties suggest a dynamic period ahead for investors in mining and alternative assets. However, Citigroup, Goldman Sachs, and Bank of America all see the metal hitting $3,000. How will the shift towards a new monetary standard impact your investment strategy in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.